In this video, I explain how to show the impact of transactions on the accounting equation. Let's take an example. The following balances were extracted as at 1st of August 2020 from Nima's business. 1st of August is the first day of the month of August. So the balances at 1st of August means these are opening balances of August month. So these asset balances and liabilities balances are the opening balances of Nima's business for the month of August. Now here we have 4 asset balances, 4 opening balances of assets. And then we have 2 liability balances. So 2 opening balances of liabilities. Then we are given some transactions which were occurred during the month of August. And then we need to show the impact of each transaction with amounts on the accounting equation. Now for this, I'm going to use a table with columns. I have explained a similar example but without opening balances in a previous video. Make sure to watch that video. Now this will be the sketch of our table. Now we need to allocate the first column to include the dates, these dates. Next we keep 3 rows. First row is to show the accounting equation. In the second row, we show the labels of each asset items and liability items. And then the third row, we show the opening balances. So before everything, we should find all the asset items and all the liabilities items. So let me write assets, equity, then we show an equity column. We are not going to divide equity column into sub-columns. And then we show the liabilities. Right now, for us to identify the columns, we need to go through the transactions. Of course, we have opening balances over here. This means we need to have each column for these opening balances items. This means already we have 1, 2, 3, 4, 5, 6 columns. And with the equity column, we have to have 7 columns. But still, we need to go through each transactions and find whether we get a new column for our list. So let me go through each transaction quickly. Purchase goods. This means stock increases, cash decreases. So we have to have stock and cash column. Right, that's right. Stock column we need to have, and also we need to have cash column. Then the second transaction, sold goods. This means stock decreases, right? And on the other hand, cash increases. So we have already these 2 columns. Third transaction, paid to a creditor. This means cash decreases. Also, creditors decreases. So we have to have our liability called creditors. Creditors. Then the next transaction, purchase equipment. This means equipment increases and cash decreases. So we have already our cash column and we need to have the equipment column. Okay, the next transaction, 18th of August, Nimal withdrew goods, 10,000 for his personal use. Now this is a stock drawing. Now what happens here? The stock of the business decreases, and on the other hand, Because of drawings, equity decreases. We have already the stock column, and equity we don't divide into sub-columns. Received 50,000 from a debtor. This means cash increases, and on the other hand, debtors decrease. So we have to have the asset column called debtors. Then paid salaries. This is an expense. So cash decreases and equity also decreases. Cash column we have and equity column. Okay. Then settle 50,000 of bank loan. This means cash decreases and bank loan also decreases. So we have to have our liability column called bank loan. So these are our columns. We have 4 asset columns and 2 liabilities columns, and equity column we don't divide into sub-columns. Now, what is our order? I told you in the previous video as well. If you go from the left side to the right side of the table, first we show the assets, and from the assets we show the non-current assets first of all. So in this example, we have one non-current asset. It's equipment. So our first column should be equipment. Next, we need to show the current assets. In the current assets, what's our order? Hope you remember this. It's first of all stock, then debtors, and finally cash. Because we show these columns in the order of liquidity. So second column goes to stock column, then third column goes to debtors, and final column is then fourth column is our cash column. And of course, fifth column is equity column. After equity, we show non-current liabilities. So what is our non-current liability here? It's bank loan. So sixth column is our bank loan column. And then the last column is creditors column, because we show at last the current liabilities. Now, starting from the second column, we can divide this space into 7 equal columns. Okay, this is our table. First column is to mention the transactions date. And first row is to show the accounting equation. And the second row is to mention the asset item names and the liability item names. So let's label them. So according to our order, our first column is equipment. Then we have to have stock column. After that, debtors. And then cash. Here is our equity column. And then the bank loan column. And finally is our creditors column. Now let's include all the opening balances. Here you can label as opening balances. Now we are going to enter each opening balance. What is the opening balance of equipment? It's 100,000. So let's enter 100,000. And then stock opening balance is 200,000. Debtors opening balance is 100,000. Cash, it's 400,000. Now, what about equity balance? What is the opening balance of equity? If we are given the assets and liabilities, we can easily find our equity balance. So what is the equity opening balance, total assets minus total liabilities. So what is the total of assets? It's 1, 2, 3, and 4. 4 plus 4, 8. 800,000. And the total of liabilities is 300,000. So what is our equity value? It's 800,000 minus 300,000. It's 500,000 rupees. So we need to enter the equity amount as 500,000 here. So remember to find equity when we are given assets and liabilities. Don't keep it empty, because there is always an equity amount when there are assets and liabilities in a business. Then the bank loan opening balance is, it's 200,000, and creditors opening balance is 100,000. Right, now we have entered all the opening balances. Now it's time to record the impact of each transaction. Now the first transaction has occurred on August 1st. So let's write the date of this transaction in the date column. August 1st or 1st of August. What is this transaction? It's purchased goods at 100,000 rupees. So stock increases by 100,000 and cash decreases by 100,000. So when a business purchases stock, stock increases, and on the other hand, cash decreases. So this is the impact of the first transaction. The second transaction occurred on August 2nd of August. It sold goods at 150,000. Sold goods means stock decreases. So in the stock column, minus 150,000. This plus mark means there is an increase of the value, and the minus mark means there is a decrease of the value. So stock decreases by 150,000 and cash increases by 150,000, because business receives cash when it sells its goods. Then the next transaction on August 10th, paid 50,000 to a creditor. So cash decreases by 50,000, and then creditors also decrease by 50,000. August 12th, purchase equipment at 20,000. So when the business purchases equipment, equipment increases by 20,000. And on the other hand, cash decreases by 20,000. So equipment, in the column of equipment, we write plus 20,000. Then in the cash column, we write minus 20,000. Right, the next transaction is Nimal withdrew goods, 10,000 for his personal use. This is a stock drawing. So when the business owner withdraws business stock for his personal use, the stock of the business decreases by 10,000 rupees. So in the stock column, we need to write minus 10,000. And then because of drawings, the equity of the business reduces by 10,000. Right, the next transaction is received 50,000 from a debtor. August 24 here. Right. Now, when the business receives cash from a debtor, business cash increases by 50,000 rupees. So in the cash column, plus 50,000. And then the asset called debtors decrease by 50,000 rupees. And the next transaction happened on 30th of August. So what is it? Paid salaries. Paying salaries means it's an expense. So we know that expenses lead to decrease equity. So equity reduces by 30,000. And to do a payment, the business has to make a cash payment. So cash of the business decreases by 30,000. The last transaction, 31st of August, settle 50,000 of the bank loan. When the business settles a part of the bank loan, the business has to make a cash payment to the bank. So cash of the business decreases by 50,000. On the other hand, the liability called bank loan also decreases by 50,000. Here we have entered the impacts of all the transactions. Now it's time to find the closing balance. So for us to include the closing balance, we need to have a row at the bottom of this table. So let's label this as closing balance. So what is our closing balance of equipment? As we can see, there is an opening balance of equipment. It's 100,000. And then on August 12th, equipment increased by 20,000. So what is our closing balance? It has to be 100,000 plus 20,000, 120,000. Then what is the closing balance of stock? The opening balance is 200,000. Then plus 100,000 means 300,000. Minus 150,000 means 150,000. Then again minus 10,000. So it should be 140,000. Then in the debtors column, the opening balance is 100,000. Then the balance decreases by 50,000. So the closing balance should be 50,000. 100,000 minus 50,000 is 50,000. Then what about the closing balance of cash column? The opening balance of cash is 400,000. Then minus 100,000, right? So 400 minus 100 is 300. 300 plus 150 is 450. 450 minus 50 is 400. 400 minus 20 is 380. Then 380 plus 50 is 430. 430 minus 30 is 400. And 400 minus 50 is 350,000. Then the equity column, opening balance is 500,000. So 500 minus 10, 490. Then 490 minus 30 is 460. So it should be 460,000. Then 200,000 minus 50,000 is 150,000. Then 100,000 minus 50,000 is 50,000. So these are our closing balances of each item. Now let's write our accounting equation. Here we have equipment, stock, debtors, cash. These are our assets. So let's write assets here in rupees. Then here we need to place our equal mark. And after that, this is equity in rupees. Then what we have is two liabilities columns. So I'm going to place the plus mark here. Then for these two columns, I'm going to name liabilities in rupees. And also I'm going to put pluses to show that these equipment, asset, debtors, cash, all these assets items we are going to add together to find the total assets. So let's place plus signs here. For the 100,000, we need to add 200,000. And for this, we need to add another 100,000. And also we need to add 400,000. Then we get the total assets. And here is our equal sign. And again, on the right side of the accounting equation, there are three items here. So we need to add them. So 500,000 plus 200,000 plus 100,000. So the same thing we are going to do for the closing balance. All the assets we are going to add. So let's put plus signs. And here is our equal sign over here. The assets are on the left side and equity plus liabilities are on the right side. So equity closing balance plus bank loan closing balance plus creditors closing balance. Now let's check whether our accounting equation balances or not. So let's add all the closing balances on the left side of the equation. So these balances. 120 plus 140 is 260. 260 plus 50 is 310. 310 plus 350 is 660. So it's 660,000 on the left side. Therefore, the total value of assets is 660,000 rupees. So what about the right side? What is the total of right side? The closing balances of equity and liabilities. 460 plus 150 is 610. Then 610 plus 50 is 660. So it's again 660,000. The total value on the right side of the accounting equation is 660,000 rupees. So our equation balances. I hope you understood simply how to indicate the impact of transactions on the accounting equation using a table like this. Make sure to watch all the videos of the accounting equation series so you can get a better idea about how transactions impact on the accounting equation. See you then. Don't forget to subscribe.